Open your banking app and look at the number. Here's the uncomfortable truth. Most of that money isn't in the bank. It isn't anywhere. It's a promise, and it only works because you and everyone else quietly agree never to check at the same time. By the end of this, you'll understand what your balance actually is. And stay to the end, because once you see where your money really goes the second you deposit it, you'll never look at that number the same way again. And no, this isn't a scam. It's how all money works. We picture our money sitting in a vault, in a stack, with our name on it, waiting for us. It isn't. A bank keeps only a small fraction of its deposits on hand. The rest is gone, lent out, almost the moment it lands. This is called fractional reserve banking, and it's not some loophole or trick. It's the entire system, every bank, every country, on purpose. So where does your money actually go the instant you deposit it? Say you deposit $100. The bank keeps a little and lends most of it to someone else for a car, a business. They spend it, it lands in another bank, and that bank lends most of it out again and again. Your single $100 now exists in several accounts at once, yours, and everyone it was loaned to down the chain. The money wasn't moved, it was multiplied. And here's the part that genuinely breaks people's brains. Banks don't lend money they already have. When a bank grants a loan, it creates brand new money out of thin air just by typing a number into an account. The Bank of England said it flatly in 2014. Most of the money in a modern economy is created by ordinary banks making loans. Physical cash, actual notes and coins, is just a tiny sliver of it. So your balance isn't a pile of notes with your name on it. It's an IOU, a liability, a promise the bank owes you. In fact, in 2020, the US Federal Reserve dropped the required reserve all the way to zero, which means the whole magnificent structure rests on one fragile assumption: that we will never all ask for our money back at the same time. Because if we do, it has a name, a bank run. And in a run, the money simply isn't there. Not because someone stole it, but because it was never all there to begin with. It's out in the world as somebody's mortgage, somebody's business loan. We watched it happen to Silicon Valley Bank in 2023. A rumor spread, everyone reached for the exit at once, and a giant bank was gone in days. So, what is your bank balance, really? It's not money in a box. It's collective belief, a shared agreement that the number means something, held up by the fact that we almost never all test it at once. Money isn't gold in a vault anymore. Money is trust, written down. That's the quiet truth underneath your entire financial life. The number in your app is real only as long as everyone agrees it is. The moment we stop believing it together, it isn't. Now, to be fair, and this matters, this is not a scam and it's not as fragile as it sounds. Lending out idle deposits is exactly what funds houses, businesses, and growth. If money truly sat frozen in vaults, the economy would grind to a halt. And there are real safety nets. In the US, your deposits are insured up to $250,000, and central banks can step in during a panic. The system runs on trust, but it's trust with a net under it, built on purpose over centuries. It works precisely because it almost never has to prove that it can. So, the second you deposit, the bank lends your money out. Banks create most money simply by lending it into existence. And your balance isn't cash, it's trust, written down, that works because we don't all check at once. The next time you open your banking app, remember you're not looking at money. You're looking at a promise everyone, quietly, agrees to keep. Send this to whoever insists their money is safe in the bank. They're half right. And subscribe, because next, why does Black Friday make sensible people lose their minds and buy things they'd never touch a week earlier? The discount is the trick.